Wednesday, November 19th, 2025. It's 9 p.m. on the East Coast, and wow, what a post-earnings party we just witnessed. Cathy, I swear, the market walked into today half asleep, and Nvidia just slapped a triple espresso into everyone's hand.
Oh, absolutely. You can practically feel the electricity. Futures are glowing like someone plugged the whole market into an H100 cluster. Nasdaq futures up 1.7%, S&P futures up 1.2%, and even the Dow, the cranky old man of the indices, managed a 0.5% smile. Nvidia basically walked in and said, "Relax, kids. There's no bubble here."
And Jensen Huang didn't just say it, he said it with that "I've seen the numbers" confidence. During the call, he just calmly went, "From where we're standing, this does not look like a bubble." And Wall Street collectively whispered, "Say it again, Daddy Jensen."
The market heard him loud and clear. Nvidia jumped more than 4% after hours, adding over $300 billion in market cap. $300 billion after hours. That's like a mini economy materializing out of thin air.
And it was a classic beat and raise quarter. Earnings per share came in at $1.30 on $57.01 billion in revenue. That crushed expectations. The street wanted $1.26 EPS on $55.2 billion. And compared to last year's 81 cents on $35.1 billion, that's not growth, that's a cinematic montage.
And then they casually guided Q4 revenue to $65 billion. Wall Street was hoping for $62 billion, and Nvidia just shrugged and said, "Try again." Jensen said Blackwell sales are off the charts, and cloud GPUs are sold out. The man sounded like someone showing up late to a restaurant saying, "Sorry, we ran out of food. Everyone bought everything."
The data center engine is ridiculous. Q3 came in at $51.2 billion versus the $49.3 billion estimate. Gaming was a tiny bit soft at $4.3 billion, but honestly, nobody on Earth cares when the data center side is producing Avengers-level box office numbers. Analysts basically said, this company is a data center empire that happens to still sell video cards.
And those supply constraints? Still here, still intense. Some reports say they're booked solid through 2026 and possibly 2027. If you want a rack full of Nvidia GPUs, you might as well get in line behind every cloud provider, 3 governments, and a biotech startup with a dream.
Adjusted gross margin, 75%. Above expectations. They're printing margins like it's a hobby.
And then Colette Kress, their CFO, steps in and drops the $500 billion mic. She reiterated they have visibility into $500 billion worth of chip revenue through 2026. $500 billion. Every time she talks, I feel like she should end with fireworks.
And it's lifting the whole AI neighborhood. AMD up nearly 4% after hours. Micron more than 3%. The usual mega-cap suspects, Amazon, Google, Meta, Microsoft, all glowing green. Even Boats, the real-time ticker, closed at 186.52, then rocketed another 5.13% overnight to 196.09. That's not price action, that's choreography.
But not everyone's staying in the boat. Peter Thiel's hedge fund dumped its entire $100 million Nvidia stake. SoftBank dropped $5.8 billion in shares. Some folks cash out and rotate. Some folks just want liquidity for their own AI moonshots. Different games, same playground.
Exactly. And on the other end, you've got Michael Burry waving a caution flag last week, saying AI firms might be hiding depreciation costs and inflating profits. But Colette gently pushed back, basically saying, our accelerators last a long time, and CUDA keeps them relevant. A subtle but confident rebuttal. Even the older A100s are still working like champs thanks to software updates.
It's a great reminder that NVIDIA's moat isn't just silicon. It's software, tools, libraries, and the entire ecosystem. It's like selling Teslas that get better with every update instead of falling apart after 2 years. Longevity is part of the magic.
Meanwhile, the Fed minutes dropped today, revealing strongly differing views inside the Fed. Some folks are focused on cooling labor markets, others are staring at inflation like it owes them money. Translation, the December decision is still a giant question mark.
And we've got big data incoming. The delayed September non-farm payrolls report lands tomorrow morning. Thanks, government shutdown. And Walmart reports earnings before the bell, a massive checkpoint for consumer spending heading into holiday season. That's like a pulse check on the American wallet.
So yes, Nvidia lit up the market like a Christmas tree, but we've got plenty of macro fireworks still on deck. Nvidia is up over 37% this year, nearly 25% over the last 12 months. AMD's been the real overachiever, up 82% year-to-date and 58% over the last year. Lisa Su called the data center market a future trillion-dollar opportunity, and after tonight, I believe her.
The demand is unbelievable. AI isn't a trend, it's a world built. And Nvidia is selling the shovels for the new gold rush, with 75% margins.
And a $500 billion order book. Not bad for a Wednesday.
It absolutely changes the tone. The AI bubble chatter, pretty quiet right now. Turns out real revenue, real demand, and real margins are the best noise-canceling headphones.
Exactly. This doesn't kill the bear cases forever, it just sends them to bed early tonight.
And with that, we'll wrap up today's Oats and Moats. What a night!
Thanks for listening, everyone. Don't forget to subscribe to Oats and Moats on YouTube for more high-energy market breakdowns with a human touch. We'll see you next time.